as we enter 2023, we're entering a substantially different market than we've been experiencing in the past 2 to 3 years here in Calgary. And what that means is that there's going to be a variety of different levels of uncertainty across, investors, buyers, and sellers as they start to make decisions for what they want to do with their properties in 2023. First-time home buyers, as well as investors and people who are buying for the second or third time into their homes are going to be looking at the market from a different lens than that of a seller. However, there are three things that will affect the entire market that everybody should keep an eye on to make sure that you're making the right decision for yourselves and for your family as you make your real estate purchases and real estate transactions throughout the year. So the three things that I'd like to talk about today are, number one, interest rates, number two, inventory levels, and number three, months of supply, right? So when we look at the interest rates have gone up quite a bit this year, whereas last year, the fixed interest rate was somewhere around the 2% range, sometimes even lower. That gave buyers an opportunity to get into the market with a low monthly payment on a mortgage and also qualify at a lower interest rate stress test, which allowed for higher purchasing power. So now that has changed. That interest rate is sitting anywhere between 5 and 6%, maybe sometimes in the high fours, but nonetheless, that interest rate is quite a bit higher than it was earlier in the year. And what that does is it changes a few things. If you're a buyer, if you're a first-time home buyer, or if you're buying for the second or third time, then what's going to happen is you're going to qualify for a lower amount, all things being equal. So if your income is the same, your credit score is the same, the down payment is the same, et cetera, then because of that interest rate being going up, the stress test going up as well, that's going to create a little bit of a lower qualifying amount for those particular real estate players. Now, when you take a look at sellers, what's happening, to pricing based on interest rates is actually that pricing is remaining relatively steady. Now, it's not what it was in the spring. We're seeing pricing, it might have cooled off a little bit, but it hasn't had a tremendous or effect, a negative effect on pricing whatsoever. We haven't seen that this year yet. And when you listen to the experts and the banks and the CMHC, insurance companies, etc., there doesn't seem to be too much of a concern. And I think the reason that there isn't much of a concern about interest rates going up to this level is because if you recall back in 2005, 2006, that's what interest rates were. They were between that 5 and 6%. And those were some of the hottest real estate years that Calgary has seen in recent history. So, just bear that in mind if you're a seller. The fact that interest rates went up hasn't quite had a huge effect on pricing. But there's a caveat to that, and the caveat to that is inventory levels. Now, when we take a look at inventory levels, they're actually about 30% lower than the 10-year average. So we have very, very, very few homes to choose from when we're out there looking to buy something. And the law of microeconomics, supply and demand. If you have low supply, and then that's going to affect pricing as well, because if you have competition and you have buyers in the market that want to purchase those properties, which we do, then that's going to help pricing remain relatively stable and not go down dramatically, right? Now, the reason that the Bank of Canada, is saying that they're, I guess the word on the street, that as to why interest rates have gone up is because they want to cool off inflation. And so, based on what we're seeing earlier in the year, where we're selling properties $50,000, $60,000, $100,000, $150,000 above asking, not every property, but that was happening. We're not seeing that. We're not seeing much of that or any of that right now in the market. But anyways, the fact that they're trying to cool off inflation may already be happening. So the reason I say that is because pricing isn't skyrocketing anymore, right? And is staying relatively stable, and we've seen some relatively low decreases in some of the different property types. Now, so that the reason I'm mentioning that is because interest rates may have reached their peak. And talking to some mortgage brokers, they believe that interest rates may have one more increase next year, maybe, but as of now, this might have been the last increase that is going to be announced in the near future. So, so now we know, what our cards are going to be going into 2023 in terms of, what interest rates we can expect to pay, and also, just keeping in mind that we have low levels of inventory. Now, when we look at your ability to sell a property in a market like this, it's affected by those two factors, but it's also affected by the demand. And one of the ways that we measure the effect of supply and demand on the current market is by looking at the months of inventory, right? So if you take a look at the 10-year average, Calgary has had around a 3 to 4 month average for months of inventory. What that means is that it's always been a little bit on the seller's side, meaning that properties sell a little bit quicker, giving the seller a little bit more power, et cetera, et cetera. There have been some periods, of course, where the levels of inventory were over 6 months, especially for condominiums, and that gave the buyer a little bit more power, and that shifts throughout the years. But right now, we're sitting at around 2 months of inventory. So with 2 months of inventory, that is a strong seller's market still, even though there isn't a ton of activity like there was last year or even earlier this year. We're still seeing that it is a strong seller's market. So if you're looking to sell, there's a way for sellers to still sell in this market for top dollar, it's just a matter of putting the correct strategy in place to maximize the dollar amount and ensuring that pricing is correct and presentation and those kinds of things. But at the end of the day, the three things that we need to take a look at if you're looking to purchase a property or to sell a property in 2023 are: what are interest rates doing? What are the months of supply in the market, so you can understand if you have the power as a buyer or a seller, and the level of inventory. Low levels of inventory means that buyers have less to choose from, and high levels of inventory means that sellers have a lot more competition to worry about when it comes to pricing their properties. Okay, so that's it for today. Thank you very much, and feel free to reach out with any questions.